And it's a new week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's take a look at what's happening in the markets. We see oil prices slip today, giving up earlier gains as investors took profit after a surge in previous sessions. But global supply fears loomed, with the European Union preparing to phase in a ban on imports from Russia. Brent crude futures were down 64 cents at $110.91 a barrel, while U.S. West Texas Intermediate crude dropped about 60 cents to $109.89 a barrel. Both benchmarks jumped about 4% last Friday, earlier increased by more than $1 a barrel, with WTI reaching its highest since March 28th at $111.71 a barrel. And the executive director of the Nigerian Export Promotion Council, Ezra Yakusak, has announced the approval of 375 billion naira export expansion grant to 285 exporters by the Federal Executive Council. The latest intervention by the government, which aims at improving non-oil export, covers a period of 2006 to date. Speaking to reporters after a walkout session on export survival, which held in Abuja, the NEPC boss also highlights other policies adopted by the council to boost non-oil export. To take a listen.
And we are going to bring up more initiatives. For example, from National Conference, we are about to set up a project called Exporters Handholding. What we intend to do is to pick up new exporters. They've just really started, they don't have an idea of what it is to export. We are going to match make them with all exporters to train them on the fiscal aspect of non-oil export, on what to do, the rudiments, the procedures, fiscal procedures to ensure that they export. So that's part of the things we are doing. And I need to mention this. That is like the federal government also to boost non-oil export. The Federal Executive Council just approved the sum of 375 billion naira. As export expansion grant to all exporters that apply for export expansion grant. And that means the backlog from 2006 to date has been cleared, and so exporters will expect that any month from now, 375 billion naira approved for the export expansion grant by the Federal Executive Council. Right now, it is going to be taken to the National Assembly for assent, and of course, about 285 exporters are beneficiaries of that EEG as at now.
All right, now to our first conversation. The Securities and Exchange Commission of Nigeria has published new rules relating to the issuance, exchange, and custody of digital assets in the country. This comes 20 months after the Commission initially issued a statement on how it would classify and treat digital assets. This is contained in a recently released document titled New Rules on Issuance, Offering Platforms, and Custody of Digital, essentially legalizing digital assets such as cryptocurrencies in Nigeria. Well, joining us now to discuss this is Senator Ihenya, President, Stakeholders in Blockchain Technology Association of Nigeria. That's SIBAN. Great to have you join us.
Always a pleasure.
Yeah, so it's another first. We were the first to launch the CBDC, the Central Bank Digital Currency, that's the e-Naira in Africa, and now we're the first to offer guidelines concerning cryptocurrencies in Africa. How did you see this development?
I think it's a wonderful development. It's very commendable to have Nigeria really blazing the trail when it comes to regulation of digital assets or virtual assets. Indeed, over the years, it hasn't been a very easy journey for Nigeria, especially from a Central Bank of Nigeria perspective. But it's very commendable to have the regulator of the capital markets, that's the Securities and Exchange Commission, finally take that bold step to bring in some sanity to the crypto markets as well.
Quite interesting. But looking at the guidelines now, which of these guidelines actually stick out for you?
Well, generally, I think that the SEC has done a good job ensuring that all of the players in the virtual asset service sector are brought in this is the first time, it's quite significant to have a regulation that recognizes all of the players in that space. This, namely, the exchanges called the digital asset exchanges, the DAX. We also have those called the digital assets offering platforms. These are guys that will ensure that anyone or any sponsor or issuer that is introducing any digital assets in terms of ICOs and all of that will have to go through these platforms. We also have generally the virtual asset service providers, which covers almost everyone in the space. And lastly, the DAX, called the digital assets, what's it called, custodians.
Right.
These are guys who will be storing, securing and maintaining the safety of these digital assets. So it's quite significant. What stands out for me, really, apart from the recognition, it's a bold step. And we have to commend that. There will always be room for improvements. Over the last few days, there have been reactions from the operators themselves about certain requirements that have been stated in the rules. First, for digital asset exchanges, in order to get license, you have to pay as much as 30 million naira. 30
million.
Registration fees.
Okay.
And then you also have to have a paid up capital of 500 million naira. And if you look at that and against the background of a nascent industry, an emerging industry, where innovation is still trying to catch up, with needs in the space, you don't want to introduce licensing fees that stifle that innovation, especially from a local innovation perspective. The players in the space are still very much the biggest players in the space are the international brands. They are foreign brands, although you also have local service providers. You want to ensure that you are creating a fair market, an open market. So on that score...
Well, do we usually have offerings from Nigerian cryptocurrency makers?
Yes. There are certain projects that have made offers, in that space through, initial coin offerings. Some of them also go through what you call initial DEX offering, which the rules did not quite catch. But I think that it is important for us to have in mind all of the players in this space, and for SEC to also look at having a regulation that takes care of not just the licensing. We need to have a fair market. We need to focus on requirements that encourage transparency, requirements that encourage efficiency. And then, of course, you have to protect the consumers. In trying to protect the consumers and ensuring investor safety, you also want to have a balance. You want to be sure that you are not keeping away or driving on the ground some of these local innovators that still need a lot of help.
Because it's quite a risky market.
It's quite a risky market, actually.
Yeah.
This is why, as the president of a self-regulatory body in the virtual asset space, we continue to ask or advocate that we have some kind of regulatory sandboxes. Nigeria did not go through that journey of encouraging innovators through this regulatory sandbox framework so that they would know how to really grow these guys. There's what you call developmental regulation. This is the time when innovation is still just coming up. The space is still nascent and emerging, such as the crypto
So we shouldn't be talking about fees, registration fees at this point?
It shouldn't be too much of the fees. Okay. We should be looking more like regulatory sandboxes to bring the innovators together, see what they are up to, to try to minimize the risk while also maximizing opportunities for them in a test tube market, just so that you see what you really need to do when you eventually bring the license in.
Right.
It shouldn't
talking
start
about
with the licensing.
Licensing, you know, about 30 million naira, you know, for registration as, you know, a crypto offering or whatever, an exchange. Where would those monies be paid to? Because we still have that CBN circular that you cannot carry out crypto transactions through the Nigerian banking system. So how does the SEC, you know, intend to get some of these payments, you know, if these crypto companies cannot pay through the banks?
Very fine question, and that's the question out there, and it's a big question no one has answered yet. Unfortunately, the Securities and Exchange Commission, in releasing this regulation or rules, did not introduce the rules to the public. So we didn't have the opportunity to understand the regulatory philosophy of the SEC. We didn't understand where it was coming from or going to. It was just released to the public. If the SEC had introduced this, as it usually does, I think members of the public and players in that sector would have understood what next.
There was
right
no exposure draft.
There was also no exposure draft to members of the public, I would say. But I'm aware that exposure drafts were made available to certain players in that sector. Now, having said that, the critical thing is, with the SEC showing interest in this space, how has the SEC also tried to get the support and collaboration of sister agencies in the financial services sector? We all understand, and we still are aware, that the CBN restriction in Nigerian banking and financial system, as far as cryptocurrency is concerned, still stands. And so there are questions being asked about whether the SEC worked, you know, in line with the CBN. Is the CBN aware? What next? Are we supposed to pay these fees? Are we supposed to do P2P transactions to pay to the SEC? So the questions are out there. But this is what I think. I think that the CBN must be aware, of course, of these rules. And if we look at the bigger picture, really, in terms of national security, in terms of the need for financial stability, in terms of consumer protection, investor safety, this SEC, CBN, NDIC, NITSDA, they are all on the same page there. There is no contradiction regarding the need to actually have a safe and sound system. Where we have certain contradictions, or might be how or what do we classify cryptocurrencies as, and how do we really regulate them from the point of view of terrorism financing and money laundering yeah, and all those illicit transaction issues. So I am happy to say that this sector, the virtual asset service sector, we have had the opportunity to sit in the same room with certain concerned agencies, such as the Nigerian Financial Intelligence Unit, NFIU, who has correctly identified the need for Nigeria to have a regulatory framework that helps to minimize or avoid issues around money laundering and financial and terrorism financing as far as virtual assets are concerned. That is a superb move. What we need now is for the CBN to also come out and acknowledge that, yes, we all agree that virtual assets could be potentially used and have been used for illicit transactions. But we don't want to throw away the baby with the bathwater. We understand that this is the future of finance. Therefore, it's not all about cryptocurrencies being bad. Cryptocurrency isn't bad. It's a financial technology. If you hold a knife and I use my knife to cut that onion and you use yours to stab someone, does it make the knife bad? So it is the use case uses. What do you use cryptocurrencies for? Focus should go to compliance. And the banks, the traditional institutions, they have fine experience when it comes to ensuring AML and CFT compliance. Why don't you empower and encourage these players to beef up and improve and boost their compliance mechanism, rather than say, we don't want cryptocurrency in there? So as we can see, the SEC has rightly and finally identified cryptocurrencies as some of security, if it has those features.
And I'm talking about,
Yes.
Being classified as securities. That's a different ballgame. We've seen how Ripple has been battling, with the SEC in America, that Ripple is a security or not. But I'm wondering, how do we, move forward with that here in Nigeria, knowing that most of these offerings actually come from abroad? Okay.
The brilliant thing that the SEC did before now, I think sometime in September 2020, was to, give us a philosophical understanding of what financial or digital assets or innovations were and the role that they can play. And in doing that, they classified cryptocurrencies into 4 major categories. One is as a security, 2 as a commodity, 3 as a derivative, and of course you can have collective investment funds. Now, in doing that, the SEC was aware that it is possible for you to argue that your coin is not a security, right? That's why it says that if certain features are there, they would be able to tell you whether or not you need to come for security registration. It is the same principle that the SEC has applied in its rules, which it just released last Friday, by saying if you are a security or if you are issuing any digital assets at all, just write to us. Let us see your white paper. If we consider that it's a security, we'll let you know in 30 days. If it's not, you'll also be guided on what it will be. Now, in Nigeria, we just need to understand that there is what we need to be a country that takes rule of law very seriously. Rule of law is critical to business. You can't talk about foreign direct investments if there is no rule of law. You can't talk about foreign direct investments when people don't have trust and confidence in the system. There are certain things that some of our agencies might do, good intention, but sometimes the effects could be pretty bad. And the ripple effect affects FDI, affects remittances, affects everything.
Yeah, well, I saw a report recently that said that it showed that the ban, that CBN, put on transactions through the financial system actually had an impact on foreign direct investment. And I'm wondering what was the connection? Because this was about cryptocurrencies.
Yes, certainly it had an impact, negative impact. First of all, on the economy, and I have to say, security as well, national security. Talking about the economy, I mean, I'm a lawyer in practice, right? And what I do is try to do business with people who also want to invest in a country. I know how many clients of ours have had to suspend their direct investments in Nigeria because they are not sure of what next regulators would do, because there was no clarity. Investors need clarity. They don't need confusion. Investors also need confidence. So when a regulator imposes certain fines and then begins to disrupt the whole space, and the whole country is all about how banks have been fined because they transacted or facilitated crypto. Yes, the regulator is doing its work, but the negative effect is pretty bad because it scares investors. They begin to ask questions.
It's a balancing. We need some kind of balance, when it comes to protecting investors and also attracting investment. Well, we'll continue the conversation, Senator. Do stay with us. We'll continue the conversation in just a moment. Do stay with us. This is Business Morning. Welcome back to watching Business Morning live on Channels Television. We've been discussing the Securities and Exchange Commission new guidelines on cryptocurrencies in Nigeria. And I still have with me in the studio Senator Ihenya, President, Stakeholders in Blockchain Technology of Nigeria. Thank you for staying with us. And, you know, still talking about these guidelines, I saw that it requires that applicants pay 100,000 naira for filing application fee, 300,000 naira for processing fee, 30 million for the registration fee, which we were talking about earlier. And I'm wondering, what's the practice, you know, in other countries when it comes to, you know, how much these companies pay for registration? Is it the same with these prices we're seeing here?
Well, Nigeria is taking the first step ever within the continent of Africa. So we might not have other regulations to, you know, really just oppose it with. But in other climes, talk about Mauritius, for instance. It's actually in Africa. Mauritius, talk about Estonia, talk about places like Cayman Islands. The idea really is to keep the fees within the administrative discretion of the regulator. It's not usually stated precisely, and this is so that the regulator would have some way of determining what the fees would be, depending on the nature, right? The nature of the applicants coming forward. You will agree with me that we have very big exchanges, for instance, out there. And there are also exchanges that are not pretty big.
And they carry out incredible amounts of transactions.
Exactly. Yeah. Those transactions they carry out, the money don't belong to them, but it goes through them.
So what they make in fees, though, it's quite a lot.
Yes, but it depends on the transaction fee. Because it's an emerging industry, the transaction fees are really almost very, very minimal. And it's interesting that at the end, the very tail end of the rules, the SEC also indicated that they will now be entitled to some of these fees as well. Yes, it's provided there that every transaction going on, the SEC will be entitled to fees. And the SEC also has the power to an authority.
But this covers just Nigerian exchanges, right?
It covers, for this? Yes, it covers exchanges, not Nigerian exchanges, any exchange that is incorporated in Nigeria, and also exchanges that aggressively target Nigeria. So there are exchanges that already see Nigeria as a very big market.
Right.
They are not incorporated here, but they are able to target Nigerian markets. They also fall into this regulation. So I think that the SEC will just need to be a bit considerate, because all fingers are not equal. Right? They also need to understand that it has to be risk-based. And that's why I talk about the focus should be on transparency and fairness and efficiency, rather than trying to block the door with high licensing fees. Some of our members in my association, CBAN, already wrote to my office saying that this regulation is just pretty much saying, you guys should get out of the markets, right? That is what it means to them.
So it's a barrier to entry.
So it's a barrier to entry, which shouldn't be so, because the SEC, as I understand it, is to ensure that there is fairness in the markets. The market is also open, but there will be mechanisms for consumer protection and investment safety.
Because it's all about, you know, protecting the consumers.
It's all about protecting,
not that should be the focus.
Yes, not stifling innovators. As a matter of fact, I received one of the notices or letters I received on Friday was that we might need to also now apply for the startup bill to apply to the virtual asset space. Because the idea of the startup bill is to also encourage innovation, especially support startups and local players to be able to also play.
So that would also bridge into the cryptocurrency.
Yes, we now see that we need to have that conversation so that the virtual asset sector is also considered when the statute bill is passed into law.
Does the guidelines say, talk about NFTs, non-fungible tokens? Because we know that one has been raining this year. It's all about NFTs, selling virtual assets like virtual lands and the JPEGs that sell for incredible amounts.
And NFTs have grown big time. Non-fungible tokens, they have grown in the last 1 year massively. And a lot of billions of dollars is going there daily. Does it cover NFTs? Now, what the rules have said is it covers digital assets. And if you look at what digital assets mean, it's a very broad term, which brings in all of the virtual assets, including cryptocurrencies. NFTs will also fall in there. NFT is a token, so it falls into digital assets as well. How would that happen? You know that when it comes to NFTs, it's really about ensuring that you have some digital rights over digital art, digital collectible, digital certificates, tickets, and all of that.
I'm guessing companies that want to actually mint some of these NFTs will also have to
Yes, it's very possible. We see the entertainment industry, for instance, players in that sector will, in no time, start issuing NFTs, for the purpose of building fan base. Some clubs in the UK, English clubs are already doing that. They're creating fan tokens, right, built around NFTs. Stars, African music stars can also get into this easily to build fan base. The issue what we should do is to try to look at regulation from a developmental point of view. One of the agencies in Nigeria that I have a lot of respect for when it comes to the idea of developmental regulation is the National Information Technology Development Agency, NITDA. The idea, they come into the space with that idea that with regulation, we can expand the markets. With regulation, we can create jobs. With regulation, we can create revenue for the Nigerian government. With regulation, we can do a lot of stuff. So what should we do? We should focus on principle-based, risk-based approaches that ensure that players are able to get into those innovations and build stuff, and as well, at some point, the licensing comes in. If you look at the data privacy, data protection space in Nigeria, which NITDA has been regulating for some time now, it's not about licensing, it's really more about the meeting minimum standards so that people can begin to appreciate, first of all, how valuable personal information is. Because when we talk about data-driven economy, it's all about the personal information. And this is why I also think that the Central Bank of Nigeria should look at the entire economy of the, you have to really look at the economy. We need to create jobs. We need to let innovation thrive while also maximizing, minimizing risk. The idea that I think that the CBN should be driving in that space, seeing that adoption of cryptocurrencies and digital assets is unstoppable, is to focus on compliance, anti-money laundering, and countering of terrorism financing is the way to go. And the CBN did get it right in 2017. That's why I am still very confident that at the right time, the CBN will do what is right.
Right. All right. So talking about raising funds and invest, there are also limits to what these companies, these offerings can actually raise, and there are also limits to what investors, would-be investors, can invest in the cryptocurrency market. How do you see those limits?
Oh, those limits, the instant reaction when some of us saw that was to say, wow, this is pretty too limiting, especially for the retail investors. For retail investors...
It's something about 200,000 naira.
Yes, 200,000
naira. Per month or?
200,000 naira. And by the end of the year, nothing more than 2 million naira. by the end of the year. So it's pretty limiting, right? We feel that the SEC might have considered starting from there because we are just taking the first steps.
It brings to fore the don't invest what you can afford to lose.
You can afford to lose, yes.
So
yes.
I think that should help.
Yes, it should.
Yeah.
But we think that at some point, the SEC might want to categorize retail investors into subcategories, so that you don't put all retail investors within that very limiting ceiling. It's quite limiting for some level of retail investors, especially retail investors that have a lot of knowledge about investing in digital assets. I like the fact that the SEC has also encouraged virtual asset service providers to invest in education. It said a lot about that there, meaning that your users, the investors, need to understand what they are investing in. That's beautiful. Now, having said that, the SEC may want to, introduce subcategories under the retail investor.
Maybe for more experienced.
For more experienced investors or persons who can show evidence that they have sought investment advice from a registered or some known professionals before getting money in, right? The idea. Why this is important is this. The idea of blockchain, crypto, is decentralization. And when you talk about decentralization, people want to do stuff in certain ways that are not too centralized. In doing so, the SEC needs to work more. This is why we talk about collaboration too. In other climes, such as the US, for instance, the idea of self-regulatory organizations, SROs, is really penetrating that market. Because regulators are saying, we don't think we are quite ready for this sector. But so that we can ensure consumer protection and investor safety to some level, we are ready to work with SROs so that players in the market can adopt best practices, But right now, before now, it was a matter of we're not looking at that space yet. And while you're not looking at that space, bad actors are looking at it and doing crazy stuff in that market. As a regulator, you don't want to allow that keep happening.
Talking about bad actors, we've seen some Ponzi schemes, make record amounts of money in this country. And some of them actually, pose the whole blockchain story, how they're related to cryptocurrency. Will these regulations help, sort out the chaff from, the cryptocurrency market?
I believe it will. It will, because bad actors take advantage of lack of clarity in the markets, take advantage of lack of regulation in the markets. So to some extent it will. But again, it doesn't mean that bad actors will be,
totally out of the market.
Closely out of the market, because it's very clear. This crypto blockchain, it's a huge opportunity. You will always have good actors and bad actors. What you want to do is to ensure that you're encouraging the good actors to stay good,
and discouraging
the bad actors.
Right.
And good actors have a way of getting to know the bad actors way before the regulators do. And that's where the idea of self-regulation comes in.
Quite interesting.
Bodies like CBAN, bodies like Fintech Association of Nigeria, they can't act as self-regulatory organizations.
Be able to identify some of the money grabs.
To tell you that we don't know this guy. Yes. He's not part of our association.
The ones that claim to be solving one problem, but actually not solving anything.
Exactly.
Just want to take money and move. Well, we've seen a lot happen in this cryptocurrency space. It's not an easy space to regulate.
It's not an easy space.
Really not easy, but it's a good move, and it's good to see that the SEC is actually looking at, regulating the space and releasing guidelines at this point. But we'll keep tracking those guidelines and to see how the operators actually react to this. Thank you so much, Senator Ihe, President, stakeholders in blockchain tech of Nigeria. It was great having you on the program.
Always happy to be here.
All right, now, so let's take a look at what's happening in the market. We have Ini, John McQuarrie, standing by right there. Ini, great to see you on that side.
Yeah, good to be here, Laddie. And it's interesting to hear you call my full name, Ini John McQuarrie. Sounds strange. Sounds strange, but interesting. And, you know, I'm really interested in the conversation you've been having with Senator. And it will also be interesting to see the CBN's reaction to this, because remember, not long ago, some banks were fined, you know, for not reporting some transactions on crypto. Right. And now we have the SEC actually bringing out guidelines. These are very interesting.
We need all the clarity, you know, regarding that market.
Yes, and then we've reached out to the Securities and Exchange Commission. We would like to have you, Securities and Exchange Commission, to come and give us clarity. Even the Central Bank of Nigeria, we really would like to have you on set, because we've reached out to them and we haven't gotten any positive response. So it would be interesting to have the regulators themselves come on set and tell Nigerians what this is about. And as Senator said, there's the need for certainty. Yeah, for investors to make decisions.
Those are conversations we have to have very soon.
And it's our job to always bring that conversation forth. Okay, so let's go to the market now. Nigeria's FX reserves dipped in the past week by $234.81 million, week on week, to $39.07 billion, which was on the 11th of May. Across the FX windows, the Naira depreciated again, 0.5% and 1.7%, and it landed at 419 Naira for a dollar. And then in the black market, the I&E window, 599 for a dollar in the parallel market, respectively. The I&E window total turnover as of the 12th of May increased by over 60% week to date. And then we see there for the week ended 13th of May that it was all positive. Therefore, the changes, FX spots was over 100% increase, and forwards was almost 179% to be precise. Futures about 297, and then FX derivatives 181, a total of 130.60 there. And then in the FX exchange, like we told you earlier, the Naira dropped again in the past week, 0.02% down. We go to the fixed income market now. FGN bonds for last week, actually for Friday, had 13 deals. We've been talking a lot about what's going on in this market. Been really quiet in the fixed income market, and the expectation is that with the MPC coming on, there were some liquidities that were passed into the market in the past week through OMO and Treasury bills and all that, and it sustained. The Treasury bills actually sustained it bullish, but I mean, for the bonds, 13 deals for Friday, total volume of 6.15 billion Naira. Treasury bills, that was bullish for Friday, total value of 4.46 billion Naira, only 6 deals, even though it was bullish there. And then the CBN, talking about being quiet, CBN bills was really, really quiet, no activity at all on Friday. Over the course of the week, we'll certainly have some analysts tell us what's really going on there. And I know that expectations are actually on the MPC, which is just next week on the 24th. For the open market operation securities, 7 deals on Friday. And the most favored there was the 2nd of May next year, 2023. And it was worth 2.3 billion Naira. That's for the 7 deals that was operational. And the NASD, the open markets, we had, it was a positive move. The all-share index ended 2.57. Market cap was up 1.06 trillion Naira. Volume 33.95. Value 2.4. And I think Food Concepts actually was one of the favored investors listings on the NASD last week with 71 deals total. And then the Central Security Clearing System also did well. The food concept there you have it. It was up 4.8 to almost 5%. Some attention it's getting there. It topped the trades to 25 million. And then the favorite equities market has been doing well, and a lot of people have not been able to explain what's driving this market. When you compare it to its pairs, other markets are in the red. I'm sure Ladi will tell you that in a couple of minutes what's going on in the crypto market. But for the equities, it's 4.25 up, and then volume 1.81, value 27.19, a total of 36,286 deals last week. The only one in red, as we see for the sectors, is insurance. We hope this week again that we'll have a green week. I'll be reporting that later on today, and I hope to bring you good news during the news at 10. Ladi, I always hope for the good news. Sometimes when you see me rejoicing.
Yeah, you like reporting green markets.
Yes.
And it was quite an interesting outing for the equities market last week. We saw the consumer goods sector do really well with all those stocks actually climbing. But, you know, Ini, I'm looking for that entry. You know, we're all looking for that entry.
You hold on.
The right entry.
You stay in the crypto space. Enter the crypto space now and leave this for now.
Ini,
let those who have been here, you know, have
we
fun.
like to diversify our portfolios.
All right.
All right, Ini, thank you so much. All right, so after the break, we head to London. That's the moment to stay with us. This is Business Morning. Welcome back. Now we have Juliana standing by right there with the details from the UK. Great to have you, Juliana. So EasyJet is to offer new and existing cabin crew a £1,000 bonus at the end of the summer holiday season. Seems it's a battle to retain and recruit staff in that industry.
Good morning, Ladi. Yes, you're right. It is a battle to retain and recruit staff, and not just in the airline sector, but across all sectors in the UK. But in particular, it has been a tumultuous couple of months for the airline services. EasyJet, alongside BA, during the Easter holiday, had to cancel dozens of flights. I think they officially put out a statement saying it was because of COVID and that all staff were off sick. But I think the reality is these airlines cut thousands of jobs during the pandemic, and they weren't able to recruit enough people in time. So EasyJet have followed along the likes of BA in offering staff these bonuses, basically to say thank you very much for working for a pretty tough time, and also hoping to attract other individuals. And EasyJet is a budget airliner, and unlike some of the bigger firms who were able to be cushioned by the amount of coffers they had in their back pocket, it just wasn't the same for EasyJet. Their share price has tumbled over the past couple of years, and they did announce quite bizarrely last week that in some of their aircrafts they're going to take away 3 or 4 rows in the back seat, and by doing that they'll have less staff to attend passengers whilst they're in the air. That didn't really go down well with their investors. They are expecting to update investors on their Q1 trading update anytime soon, and I perhaps believe that this this announcement today is to cushion the blow for the falling numbers.
Quite interesting. Well, we'll keep tracking that company. But it's a new week. What data are we expecting for this week?
It's a new week, and it is a busy week in terms of data, which kicks off tomorrow. We're going to have a look at the unemployment data for the month of March. Now, unemployment in the UK has been falling consecutively, month on month on month. I believe it is about 3.8%. The City analysts are expecting unemployment to have fallen by about 0.1%. That comes in tomorrow morning. And then really, I think everybody is going to be waiting with bated breath Wednesday, where we finally get inflation for the month of April. Inflation at a 3-decade high. Cost of living is all anybody's talking about in the UK at the moment. Inflation currently at 7%. Some economists are expecting it to reach between 8.9 and 9%. And now, if that's just for April, then the forecast we got a couple of weeks ago from the Bank of England suggesting that inflation could reach double figures by the end of the year could come much closer. In fact, it could come on Wednesday. And then on Friday, we are going to be having a look at retail sales. And that is also a key indicator of whether or not this cost of living is starting to bite. We already know it is, but are people preventing themselves from shopping? I think we are going to expect that on Friday, but we just have to wait and see. Lots of data to keep us busy, as always, Laddie.
Right, we're looking forward to all of that data. Well, it's all about cost of living rising at this point. Thank you so much, Juliana. We'll catch you at 1:30 on Business Incorporated.
Thank you.
All right, now let's take a look at the other markets. We see, let's look at the Fear Greed Index in the crypto space. Now it's about 14 points. It did get below the 10-point range over the weekend. It's still extreme fear at 14 points, but better than 8 points. It touched the lowest over the weekend. We see market cap there, $1.27 trillion. It's down about 0.26%. Volume traded down about 3.51%, while Bitcoin dominance sits at 44.35%. We see Bitcoin there, $29,536 at 8 a.m. this morning, up about 1.22%, but it was above 30K over the weekend, but now we're seeing it go below that 30K support. Price of Ethereum, $2,009. That's up about 1.45%. Volume traded $18.43 billion. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Great to have you. Good morning.
Yeah. Hello, Laddie. Good morning.
Yeah, quite an interesting price movement over the weekend. But we're seeing Bitcoin lose that 30K range. But we're seeing a kind of seesaw movement around that support. What are you seeing for this week?
Yeah, you know, Laddie, it's been a very quiet Monday, knowing fully well that the market routes that happened last week cost the crypto market over $300 billion in market value. And we saw the systemic growth stable coins played in that aspect. So we've seen substantial amount of investors off the table, and the dollar seems to be kicking up Monday morning on a strong footing. Having said that, you know, that's surprisingly why Bitcoin dropped below the $30,000 support level. It's very tricky because looking at the most recent economic data coming from China, growing concerns of economic growth slowing down globally has really kept a lot of investors shaky. And more indicators that come to that narrative will definitely put the crypto market under more pressure. So that is not an interesting situation in the crypto market right now.
Really not interesting. And talking about, you know, stable coins, you see the Luna saga rages on after the USD depegging. But apparently Luna is still trading on exchanges. What does that tell us?
Well, you know, it's very tricky to comment on private listing of these tokens, because you could see that at some point exchanges like Binance delisted it just to protect consumers, and a lot of people were complaining that at least they should have given it a more decentralized approach. But I think lessons need to be learned. We've seen the systemic importance stablecoin play in the market, and that's why we're seeing powerful policymakers like Janet Yellen talking about stablecoin regulation. For Luna, I think time will tell. We've seen top players in the industry. FTX chief recently even announced that despite the fact that we saw drawdowns in Luna prices, the protocol had some strong fundamentals and transparent structure, but you know, it was just a bad product that had systemic which brought the price down. But I think future occurrence, I think regulation will really address that. But for now, I think it's a lesson for investors not to put what they cannot afford to lose, because we've seen a lot of investors losing money on those investments. Very sad.
Quite interesting. But are we seeing this, you know, impact other stable coins? Like we still have the USDT, we have the BUSD and the USDC. How is this impacting, you know, those stable coins?
Yeah, in the short term, yes, it had impact, because we saw that a lot of investors had to move funds away from these hard asset-backed stable coins. But the difference is that in the long term, I think Tether, USDC, and other stable coins would not suffer such risk because they are backed by actual assets like fiat or commodities. And you could see that we are seeing strong entities backing these stable coins. Take a look at USDC, for example. We're seeing an 8 trillion asset manager. I'm talking of BlackRock, being a custodian for that. And we're also seeing Tether bringing out more transparency on their daily website. And you could see that at some point they even burnt the amount of token in circulation because we saw some liquidation. But lessons need to be learned. We've seen a lot of panic in the space. But I think in the long run, I think stable coins will be regulated, and I think sanity will prevail.
Yeah, because
I think the market is really adjusting that. Yeah.
Because stable coins are really important for such a volatile market. When you want to reduce exposure, and still remain in the market, you run into the stable coin. But it's a huge risk. What happened to UST? But looking at the market right now, we know the shorters and the long traders right now will be battling for what direction, Bitcoin will be going next. But looking at your crystal ball, who's likely to win the long and short story?
Ladi, it's very difficult to bet against the bears, knowing fully well how the bears destroyed all markets, including even the fixed income market. So I will definitely stick with the bears. But if you look at just today, we saw a number of bears getting liquidated, just shorting the Bitcoin futures market. So it's very tricky out there, but I think the bears still have the fever on their side.
The bears still have it. All right. Thank you so much, Olumide. Always great talking to you.
Thank you, Ladi.
All right, now let's take a look at the top alts by market cap. It's kind of a mixed bag there. We're seeing BNB there down about 0.51%. We see Cardano 55 cents, up about 2.91%. Incredible how Cardano is at this price right now. Just a couple of months ago, Cardano was above the $1 mark, but we're seeing how volatile this market is. We see eCash there also up by 1.55%. XRP 41 cents. That was trading at 80 cents for the longest time. Looking at how much this market can actually pull back. Now we see top 5 gainers. We see Arweave there topping the counter up about 13.91%. And we see XEM there up 6.78%. And KuCoin shares also on the top gainers list. Let's look at the top 5 losers counter there. We see UST, that's the stable coin for Luna. That's supposed to be $1, but we're seeing it at 16 cents. It's down about 14% this morning. And GMT there down about 12.53%. So it's still a huge, highly volatile market that we're seeing this morning in the crypto space. All right, that's it for the market, and that's a wrap on the program. Thank you so much for watching. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.